Take a look at shares after hours, down nearly 9%. A lot of disappointment, clearly, when it comes to the guide. Just to set the scene here, I'd love to hear your reaction.
Well, nobody likes to guide high anymore because it doesn't make any economic sense for any CEO to be overly optimistic. So I think that they're playing the Apple playbook, which is keep expectations low. But I think these are great numbers. There's no parsing about it. I think what people wanted was even better. They didn't really up their guidance for the year or other things that I think people were hoping for. And so we see a little pullback in the stock. But Netflix is in a phenomenal position. They continue to just basically print money. They have a ton of free cash flow to reinvest into the business or to distribute to shareholders one way or another. So this is just a core holding for us. And I think they pulled a masterful gambit with the way they handled Paramount and Warner Brothers. So they're now the top player in the entertainment industry, and I think that'll be forever.
Well, you mentioned, what happened with Warner's, and we did see them boost their full-year free cash flow outlook. A lot of that has to do to that breakup fee that they got, $2.8 billion. I mean, as an investor in the stock, how would you like to see them sort of spend that breakup fee? Where would you like to see the money go to?
Well, after hours, they could just buy back stock. I think that the stock is actually relatively cheap compared to Netflix's historic valuation, and I think the market price hasn't really fully recovered from all of the merger stuff. And so as an investor, returning capital to shareholders, that's what they should do. If they can't invest it in the business, they return it to shareholders, and Netflix is pretty aggressive about doing that. So this is a great shareholder friendly company, and that's why we like it.
Yeah, and they point out, too, that cash flow, big cash flow number also accounts for the fact that they paused that buyback program. On the Warner Brothers side, I mean, they kind of flick at it very quickly here, basically just kind of reiterating what they had in that letter from February, where they basically said Warner Brothers would have been a great addition and it would have accelerated their strategy, but in their words, at, quote, the right price. When you look at sort of the idea of what Warner Brothers could have brought to the table and what Netflix has going forward here, should we be looking at Netflix maybe having the potential to outpace Warner Brothers in terms of performance going forward? And I don't just mean in terms of the stock, but I'm talking about in terms of viewership, subscribers, et cetera.
Yeah, in fact, that's what's going to happen and why we're so bullish is what they actually did was they stuck, Paramount Skydance with a huge ball of debt that they'll never be able to pay off, on top of the fact that everybody in Hollywood hates the deal because they know it's going to be layoffs and less production because they've got to pay ridiculous interest on all this debt. And so what they did was, instead of having a bigger, stronger competitor, they forced that person to pay so much money that now it's a weaker company and has a lot of issues even just to complete this merger. And so they actually have less competition now. The way we look at Hollywood now is it's a two-horse game between Disney, Hulu, and Netflix, and that's basically it, because everything is either cut up or falling apart or not sure where it's going to end up or how it's going to be. So Netflix is in the driver's seat because Disney still hasn't fully articulated their streaming strategy in a way that would be competitive to Netflix. So what's happened now is they are the entertainment industry, or what we call, they're the cable company for the world now, and they could just grow forever.
Yeah, and I answer that question to kind of set up to this idea. We were having a debate with some of our colleagues about the pending departure of Reed Hastings, who's not going to stand for re-election to the board. I mean, this would effectively end at least his formal role in any sort of company management. Obviously, he gave up the CEO chair to Ted Sarandos and Greg Peters a while ago here. But when we talk about the innovation that he brought, particularly that big pivot to streaming, I mean, obviously the mail order business was a huge gamble, but even that pivot to streaming, a lot of people had no idea what he was doing. And then when I look at Ted Sarandos and I look at how he has basically become a Hollywood mogul to a certain extent, Greg Peters a little bit there. What is the leadership of this company going forward? How is this business going to be run? I mean, what do you think their vision, Sarandos and Peters, assuming they are going to be the shepherds for this for the next few years, what does that look like to you?
Well, Ted is the king of Hollywood in a way that we haven't seen since 100 years ago, with just this kind of dominance and also his relationship with so many in the creative community, despite changing the format in a way that a lot of people didn't like. people know if they want to get a project done, they should probably call Ted first. Reed really hasn't been that involved, and I think exiting the board probably has something to do with his political ambitions, which may or may not be true, and I'm hoping that he does actually spend his time trying to make this country a better place. And so exiting the board now makes a lot of sense for him, and also to protect Netflix if there's any blowback for taking any political, route. But he's talked about these kind of things in the past. So moving forward, though, Netflix is about Ted and Greg. It's really about Ted, and he's just in his prime, just dominating right now. So that's what it's all about. And what we see in the future is more of the same, which is how do we make sports a bigger part of what we're doing, but not paying ridiculous fees for sports rights? How do we continue to make the best content, whether it be shows? They're buying a lot of content actually from some of their competitors even. If you go on right now, Anaconda is one of the top movies on Netflix right now. They didn't make it, and so they're still buying content from people who realize they can monetize their content better on a competitive streamer versus their own, which is like crazy to me. So I think they've got a lot of levers, and they're doing well with video games right now. This is something a few people are starting to notice, but they really have now are starting to attract younger people to their gaming platform, and that is a huge opportunity if Netflix can monetize their IP in gaming. So we like the direction of the business, and we're happy that they're focused on what they're doing and not trying to eat up a big merger that would ultimately kill them.
Right, absolutely. And I do want to talk a little bit about, you described this basically as a two-horse race. It's Disney, Hulu, and then it's Netflix. You called Ted Sarandos the king of Hollywood, which is quite a crown to carry. And I just wonder, what are the risks here? Because, the way that you're phrasing it, it sounds like this is Netflix's game to lose. So what would a misstep look like?
Well, the risk to Netflix, the internet goes out. I just don't know, like, what would hurt them now when this was the risk that they actually won the merger. See, if they would have bought Warner Brothers, Netflix would have been at great risk absorbing this dog. Warner Brothers has killed every company who has bought it, and it has been 5 now, and so it's going to kill Paramount, Skydance, just like it killed the other 4 or whatever. So I was really worried about that, and what we were betting on, that they were just trying to drive up the price and get out, and that's what ended up happening, and that's why we're more bullish than ever, because they're going to really be stuck with this. So it really is Netflix's game to lose right now. But when you think about losing in a generation that basically watches YouTube and Netflix, there is no losing for them. What they need to focus on is not getting lazy. Continuing to make good content, have high standards of what the expectation for that content is, and not getting lazy and just throwing money at all these projects because they're the top. And so as long as they continue to make high quality content, people will come. Just like there's some great Disney movies coming out this year. They've got 3 great movies on tap. And if you put out the stuff, people will watch it. And so as long as Netflix keeps making good content, they'll continue to print money forever, I think. So, kids today, they watch YouTube and Netflix, and that's pretty much it.
Yeah, it's pretty wild. And in your view, Netflix just has to keep grinding here. But I do want to talk about the point you made that, they buy a lot of content. It's not just Netflix content that's on Netflix. That's right. And they're also a buyer of Warner Brothers Discovery content as well.
Yes, it's all over their streamer right now is Warner Brothers content.
Well, I'm wondering, then if you do see a situation hypothetically where, Paramount, Warner Brothers Discovery, that is sort of an albatross, and that's a company that's weighed down from here and not firing on all cylinders. I have to imagine at a certain extent that would be bad news from Netflix if there were less people, less firms producing quality content.
Yes, but, I live here in LA, and there are so many people working on quality content that, Netflix can find it on every corner here. You know what I mean? So it's really, I think, having less competition in content is actually bad for Hollywood as a whole, because I want to see all the studios survive and grow and prosper, because it's good to have lots of competition and great content. You get better content with more competition. So there's something to that. But I don't look at it that way. I think that business is sort of like a contact sport, and you got to play for your monopoly, and that's the way you win, is by having a monopoly. And the biggest, the Mag 7, the biggest, most successful companies in America are all monopolies or duopolies, and Netflix is now a monopoly, and that's where you want to be. And so any way you look at it, if I'm a producer and I'm working on a project, I'm calling Netflix no matter what, and that's just the way it is.